good morning. If your weekend was like mine, it was full of headlines, TV updates, notifications being sent to your phone, all revolving around the escalation in the Middle East and now beyond. We are seeing our country get involved with conflicts that seem like they're on our doorstep at times and sometimes thousands and thousands of miles away. As a means to be proactive with what we are seeing on the Tradewinds side and ways that we can best support you both through the good times and maybe the not so good times, we wanted to get together, and I'm joined this morning with one of our financial advisors here at Tradewinds, Jeb Bowie. We have a handful of important items and things to keep in mind as you live your daily life, of course, but stay cognizant of some of the world events that we know are going to continue to happen, whether it's pertaining to this conflict and inevitably the ones that will come to follow. Jeb, thanks so much for joining me this morning. I wanted to start by just reading a handful of headlines that I personally read over the weekend, and of course, the news media is busy at work. Reporting from CNN just that the war is continuing to widen. AP reporting over the weekend, Iran's supreme leader being killed. And of course, the impact from an economic perspective. Some of the oil shipments being suspended. We know transportation is continuing to feel some stress in terms of oil as well. Before we get started and talk business, I think it's ever so critical to take a step back and be a human first, not just an investor or an advisor. We're talking about real pain, real suffering, people losing lives, property being destroyed, people being displaced. I think it's important to point that out in the crazy world that we live in and a lot of question marks. It's important to be a human here first. I think that's the approach we naturally want to take, both for the people that we work with, so you guys watching this, along for the people who are boots on the ground, as they say. Not sure how that impacts your approach to this or what you would add.
No, I think that's well said. My hope would be that my first impression, anytime I look at one of these headlines, isn't, okay, what does that mean for my business or my money? There's a lot more to it than that. So I appreciate you calling that out on the front end, that we're talking about a lot more than money here. But as is the nature of our jobs and our roles, that's the part we're going to mainly focus on today. But again, that's obviously not the main thing at all. So just keeping proper perspective as we go into this conversation.
Yeah, and I think that's, you lead in well to setting up our conversation today, right? We are not foreign policy experts. We certainly don't have background in war strategy and the really high levels in which our country and how other countries are communicating and planning around. But the money side, the financial planning, the investment management, that is a sphere where we can add some good influence on how we make decisions and how we continue to stick to that process, even during times of stress and a lot of uncertainty. So what should investors do? How do we take this information in as professionals? And ultimately, how do we support you through the times of really high uncertainty? It seems like we've been living in this world for a long time. Uncertainty has been the key word of the year, it seems like the past 5 years. Do you feel that same way, or is it just heightened here as of late?
I think that's probably the way the world's always been, to be honest.
Fair.
It goes back to some of what my grandparents said, that there'll never be another time like this, and then my parents said the same things, and then here you and I are saying the same thing. So I think that when billions of people get together and complex country dynamics and interpersonal dynamics, like uncertainty comes with the territory, right? Which is probably a pretty good segue into starting to talk about the money aspects of it.
Yeah, so I'd really like to get your impressions on that, if not to delegitimize the events over the weekend and what seems like what we'll be dealing with the next couple of weeks, but we have seen times of uncertainty, and that's almost a prerequisite to any investor. That's partly what makes markets work. There is not a guarantee. There's no pot at the end of the rainbow, pot of gold at the end of the rainbow. How should we approach that as just investors, as citizens in this country? What types of things come to mind for you as we talk through making decisions and sticking to a process? What would you say?
I think going back to, you set this up well, but uncertainty is it comes with the territory, and the reason that markets do what they do is because of the volatility involved. It is not for everyone, and maybe more importantly, it's not for every single dollar. So to answer your question of how do I think about this is, if every single one of my dollars was at work in the broader financial markets, and I didn't have any money dedicated to kind of an emergency fund or being able to come up with some cash if I needed to for any reason, or even just having a little bit of whether it be bond exposure or we hedged equity, whatever the case may be, something that kind of makes my heart feel better when it comes to the investing.
Yeah.
It's something where I think we're going to talk a lot about is investing is very numbers based and theoretical, but also emotions drive a lot of generally bad behavior when it comes to investing.
Mm-hmm.
And I think the point I'm trying to make is volatility and uncertainty come with the territory, which is why we aren't generally out there telling everyone that every single dollar and every single resource should be behind uncertain financial markets. We don't want news headlines to pop up and then you to feel the need to make sweeping changes because we haven't already prepared for it on the front end. What are your impressions?
Really well said. I will tell this often to newer investors or those kind of relearning or understanding a bit more of how markets operate, but any investment decisions that is made and your heart is beating while you make that decision, more oftentimes than not, it's probably a poor decision or it's an overly emotional one. That doesn't inherently make it a bad decision, but it does take it out of the investing world and place it more in the gambling world. Mm. Of course, I think we think of those two ideas as being completely separate. There are reasonable expectations we have around investing, especially prudent investing, where gambling almost inherently doesn't carry those same kind of guarantees or the probability isn't on our side. I'm reminded by the media's usage of words in their headlines, whether it's a normal day, if those even exist anymore, but even things like I've seen the last couple days where markets are shaking, markets are deteriorating, the stock market tumbles, key indexes sink. Be very careful, and I think it's mindful even for myself as I see these headlines every day, of centering yourself, controlling what we can control. There are elements of your plan where not every dollar to your name is invested. It's not exposed, even if that is a large portion of your net worth, as a lot of our clients have. It's a substantial portion of my net worth of what we have invested. There are many different ways to invest. It's not all buying a handful of companies that may be really exposed to certain geopolitical events like this. So I like that. Volatility is the price of admission, right? You know what you're getting into, or ideally, you should know what you're getting into when you invest. But the math actually, and history actually teaches us a pretty interesting lesson. You'll see a graphic on your screen here, but it's really looking at the last, give or take 80, 90 years, 70, 80, 90 years of a lot of the conflicts geopolitically, not just here at home, but thinking abroad, everywhere from Pearl Harbor in the early 40s, the Korean War, and even more recently, Russia going on the offensive, 9/11, the Iraq War. It's a little wild to see these red dots that you'll see on your screen, but that blue shaded portion still represents the equity markets, or the stock markets is what we would call them. Anything in particular jump out to you, Jeb, as you see both the red dots and how seemingly frequent and almost, dare I say, normal that these red dots happen every once in a while? All the while, the backdrop of that blue just continues to grow and grow.
Yeah, I think it's nice when you can look at that with the benefit of hindsight.
Oh, yes.
We know where things have ended up, and maybe this is going back to your point of that you were kind of talking about how everything feels uncertainty these days more than others. And I would say, going back to all those events, how much more uncertain was it when these attacks came to our front door via Pearl Harbor. Like, that was an attack on U.S. soil. I can't imagine being our age in those times, and am I getting called to war and all of this. And so not thinking that our current time is unprecedented, because I would say it's absolutely not. But again, when you look at that, the thing that sticks with me is the hindsight of it all. We can see where markets have gone despite these short-term uncertain times. And for me, it gives me some comfort as I say, okay, I want to be committed to a plan and committed to the process of what I've set up investing-wise moving forward. That we're not in uncharted territory, even if the players involved are different and the context may be a little different.
So the overall main ideas of the story are pretty consistent, just new characters come in from time to time. Is that a fair?
Yeah, I don't want to reduce it too much, but to a certain extent, yes.
Yeah, so as we just continue to look at the chart and then beyond, this is one of the lessons of any tried and true investor will tell you investing can be quite ugly at times. It is not as simple as put your money in and you're going to get your magic 10% a year. I think our industry often quotes, if you just maxed out your IRA, then you would have ended up with millions of dollars.
Yeah.
We tend to leave out the part of the pain and the struggle and the losing of jobs or the geopolitical events that really put pressure on just the vacuum calculations. Really important to know the power behind why we're investing in the first place. But we tend to have a good handle of the start of the story and we figure out the end, but we miss a ton of the detail in between. Speaking directly a little bit more so, perspective-wise and expectations is such a huge part of investing, and this situation that's unfolding in front of our eyes really isn't any different. As we were preparing some thoughts, I was actually pretty surprised to see the size of Iran just in the big global scheme of things, and I'd like to share a handful of bullet points with the audience. We tend to think of the Middle East, and rightly so, as being very oil rich, right? That tends to be a big reason or commonplace in a lot of the headlines that we read. Interestingly enough, Iran only makes up about 3 to 4% of the world's oil output, not to be confused with reserves. Iran is very rich in reserves. A lot of the world's, as best we can tell, oil is actually there, but how much of it is actually included in output? It's very, very small. It doesn't mean it doesn't matter. I'm not insinuating that it doesn't matter, but perspective is helpful in seeing relatively small portion of overall output. I think that's important for me to keep in the back of my mind as well. Even on a larger stage, Iran is a very, very small part of the total world's public markets. Right? We tend to not think of a lot of public companies being headquartered in Iran, maybe not the most business-friendly country in the world, very volatile, some social constraints, religious constraints as well, at least we've seen in the past handful of decades. But anything in particular about Iran as a country or some of the moving parts of the puzzle here?
Yeah, I like your kind of everything you just bullet pointed there for us is perspective to me. Keeping into perspective kind of the scale at which we're talking, I think it would be a little different if the United States and the European Union were at full at odds war with each other, which is where a lot of from market perspective, market capitalization is. Dollars trading on markets, those are some of the big players, and obviously we know there's plenty of others as well. But just broadly speaking, oil, there's going to be some sort of disruption. I think we already know that. To your point, that's where a lot of the headlines are. But again, keeping proper perspective of who are the players involved, and from a market capitalization standpoint, who is most likely to be disrupted. These are all really hard downstream effects to predict, which goes back to, I think, probably my favorite thing you've said is controlling what you can control. I think that's a valuable lesson investing for sure, but especially as we're talking about what can any of us do about a conflict that's happening thousands of miles away in the Middle East, the answer is not a whole lot, right?
Sure.
So
Sure.
well outside of our control. So how do we respond then becomes the question.
Agreed. And continuing on that idea of perspective, Iran makes up way less than 1% of the publicly traded companies in the world, where the U.S. roughly makes up about 2/3 of the world market capitalization. So the size of companies headquartered here in the United States as compared to where else in the world. That's a pretty stark difference. That does not make the U.S. infallible or immune to extracurricular activities, putting it very simply there, forgive me. But it is helpful to see. I mean, these countries tend to make up a lot of the headlines, and I think it'd be a mistake for investors to take in that information at the headlines. And many of them do more than just lead on. They're directly telling you, here's what is going to happen, as if they actually know. But going from that point to, I need to make a decision, I need to change something, I think that is the biggest single-handed risk that I see that could plague a potential investor. We know markets tend to come back, but not every investor comes back. Right? There are big decisions that a lot of people you know, your family members, the people you break bread with, who will go about this much differently than we would, or we would advise you to. So keeping your composure, keeping your wits about you, even during times of stress, I think that's the idea here. Controlling what we can control. Let's talk about just prescriptions. What should people do, or maybe equally as important, what should you not do? Just speaking generally here. What comes to mind when you think about your plan and how we put it together in the first place?
Well, I want to highlight kind of a concept that we were talking about before we started recording this, which is this concept of complex adaptive systems. One of the main, it's a very nerdy term and one that I don't feel fully prepared to unpack, but I want to zoom in on one particular piece of it. A complex adaptive system is one where, even with the benefit of hindsight, you can't quite define why we ended up where we ended up. So this is true in biology. Even with knowing all the inputs, we still can't see exactly why we as humans are made up the way we are. The inputs of our food and our exercise and all those things, we're still complex and adaptive. I think economies and markets are exactly the same. We can know the price, the stock price of a company, or even broader, we can know where the S&P 500 ended up. And even with the benefit of hindsight, we can't say, it's not a simple math equation. It's to say, well, this company did this and this company did this, A plus B equals C, even with the benefit of hindsight. So to go with your question, I would say, from a behavioral aspect, for me, it's helpful to know that even if I had hindsight, I couldn't have done this perfectly. So why am I trying to do it perfectly on the front end? Why am I trying to predict something when I couldn't have even done it well, knowing how everything's going to play out? I hope that kind of concept resonates some. Do you have any impressions on that as you move into just kind of practical steps for clients?
I think something I like to focus on when I meet with clients, and I have to remind myself of this too, is it's not just like where we're starting and where we're ending. I think the process and how we make those decisions, that's probably the biggest thing that we help people with, is how do we build that decision-making process that's personalized to you, that is incorporating specific elements, personalized details about your life, the way you consume information. You know yourself best, but we want to know who you are and the things that you find important. In a time like this, under stress, depending on your willingness to pick up that phone and give us a call, which you're always glad to do so, but that's important information for us to know as we invest your money as appropriately as possible, and we plan around the things that are actually important to you.
Yep.
I think when we pose that question to people, what are your goals, or what are you looking for your money to do for you? I haven't heard yet. We want to take our money out when things happen across the pond 100%. That we can't envision. Should we be aware of it? Doesn't matter, sure. But in the context of what we look to build and that decision-making process, I think that's that complex system we're planning around an entity, if you could even call it that, that is inherently unpredictable
100%.
and is much more complicated than just markets went up today because of A, B, and C. You are clearly not doing the markets justice if you think that is acceptable or a little bullet point, here's what happened, although the media tends to teach us. It's very simple, and we can just look back and predict it from there. Good. What do you think about this second graphic here, Jeb, titled the S&P 500 after major geopolitical events? There's a handful of events listed here, similar to what the audience and we saw on the first graphic, but anything particular stand out to you?
Yeah, we continue to, I hope no one who represents a news outlet's watching, because kind of just throw them under the bus, but I think for good reason, because the problem, at least in my experience with this, is anytime something crazy happens, whether it's geopolitical or we go back to tariffs that you and I were talking about not too long ago, whatever the uncertainties that are entered in, news outlets love to run with, here is the uncertainty and here's how you should respond, here's what you need to do, and they want you to click on it and they want you to go read, but it's always this implication of action is needed. And I think that this kind of tells a pretty compelling story of, and I think that the news media has probably changed a little bit in modern times compared to what it would have been maybe during the Korean War, and the Wall Street Journal probably wasn't saying, here's what just happened, here's how to go make a trade with it. I don't know, I wasn't around, but I do think that the takeaway for me is, just because geopolitical uncertainty is around doesn't mean that markets respond negatively, especially over even, so this is 1 year, going back to that original chart was even more so like over long periods of time, which is how we're trying to deploy our own money and client money, right? So I think just it's not apples to apples of when blank happens geopolitically, then this is what is going to happen next. This is the next shoe to drop as far as markets are concerned. What are your thoughts?
Yeah, so it's not just a calculation, right? You can't add A and B together and expect to get C every time under every circumstance. We're clearly dealing with more palms to the sky moments from a world perspective than just what the past has given us. I'm reminded too that there is science and there's evidence-based research that supports a lot of the themes that you and I are talking about this morning. I think that's an initial fear perhaps of even you watching. A lot of what we're saying is don't run to change things. Don't try to time your portfolio around things that may seem incredibly obvious, right? We're talking about inflation and oil and some of the risks out there. At the same time, we're saying a lot of times your financial plan already incorporates this. This is how we think about deploying money, investing money, but there's actual science to that. It's not a lazy approach. It's more thoughtful, actually, than hearing a headline and acting on it. That is really easy to do. But I think that math, and I'm very confident, the math and history and research actually supports sitting on your hands, being intentional about what are we using that money for. Now we're talking about you actually investing, not gambling. The longer we make that timeline, regardless of what's going on, the rosier the picture actually comes to be for markets-wise, but not all investors. I don't know if I'm doing a good job explaining that.
You absolutely are. I mean, something that even as you were talking that just kind of stuck out to me is small sample size, granted, but over these particular events, that average 14.2%, that's greater than the long-term S&P 500 average is. So it's during these periods of volatility is when, at least for these particular ones, investors were more so rewarded for being a part of them rather than this we hear this a lot of like, well, I'm just going to wait things out.
Wait it out for a while.
See where things go. And realistically, it's during those periods of volatility that for whatever reason, going back to the science of all this, markets seem most interested in rewarding investors because they're rewarding those who are sticking around while others are fleeing to safety.
Yeah. I think Buffett has a great quote of the market has an uncanny way of taking from the impatient and giving to the patient. Something like that. I think there's an awful lot of wisdom behind that. The rhetorical question being, are you in the impatient or the patient category? We want to encourage you, and for good reason, to be in the latter half. But as we come to an end here and conclude, is there anything in particular that you would point out? It seems like definitely we've demonized the media here to a degree, maybe rightfully so, but I love that saying, the noise is loudest when you're sitting next to the speaker. So controlling to a degree what that speaker looks like. We're not saying put your head in the sand, this isn't happening, it doesn't matter. I think we're saying the opposite. It does matter, but the impact on your actual decision-making process, that's where we're naturally going to want to slow things down and really encourage you to be thoughtful about how you make those decisions. And that interesting dynamic between gambling and investing. I hear that a lot from newer investors. It's gambling, it could go up or down, which is true until we see how investing actually works, and you're rewarded longer for investing than you are staying in the casino. The longer you stay in the casino, the more your odds get less in your favor. Prudent investing is quite the opposite.
Absolutely.
Anything else as a big takeaway?
A good financial plan doesn't need you to predict the future. If we're trying to predict the future for you to have success, then we haven't done a good job of building a financial plan. Alternatively to that, though, the thing that we are more concerned with, rather than helping clients predict futures, is avoiding the big mistake. You said it well earlier that markets we expect to come back over a certain amount of time, but not always all client portfolios, because some people can't handle the volatility or get caught up in the news headlines or the advice of a family member, and they make the big mistake and they miss out on going back to I think it's the COVID-19 was the one that had the biggest return on the 1 year forward after the crazy geopolitical event. Missing out on a 40% return, that's a big mistake. That's something that's going to hold you back for potentially meeting your future financial obligations in retirement and beyond. So what we're really concerned with, and I think the main thing that we kind of wanted to talk through today and hope that our clients are understanding, is not that we want to put our heads in the sand, as you said earlier, but we are here to talk through and help avoid clients make a big mistake where we have this illusion of control that when something's going wrong, we must take action to fix it. And I think our argument would be, you're more likely to break something as you're trying to fix something. Does that make sense to you?
Well said. Yeah, and I think that's one of our chief jobs is we appreciate your trust in us, how thoughtful we are making these types of decisions on your behalf and with you, by the way. This is a collaborative effort, so your trust, especially during times of stress, is appreciated. Avoiding that big mistake or those big mistakes. You get a handful of options or dilemmas over the course of your lifetime, no matter how old you are, what stage of life you're in. We want to assist in avoiding those big mistakes, no matter how alluring they seem on the surface. The invitation would be to reach out to us. We want to share all of our resources, whether it's what's in between our two ears or research as we watch it, the headlines as we naturally watch, as people, as citizens, and as investors and advisors as well. So thank you for your continued trust, and we're just an email or phone call away. Thank you.